Hey everyone, Ahmed here with Down to Trade. I originally shot this footage on October 14th, 2022. But back then, I was still so green with making content that I would kind of jumble too many aspects of the channel into every single video that I made. So I've decided to go back through my old videos, find the ones with the most important content in terms of providing you with quality trading education and getting rid of the fluff and just leaving you with the meat and potatoes. So here goes. Now, the day that I shot this, I was able to take advantage of a little known exit strategy that we developed for the phalanx option strategy that we use to trade 0DT on the SPX. I covered this exit strategy in a previous video earlier that year, but unfortunately that time in that first video, the trade ended up rather disappointingly. We didn't lose anything, but we also didn't gain anything. It was pretty much a dud. But the day that I shot this video, I saw the opportunity come up again and I jumped on it. Today I'm going to go over that exit strategy in great detail. What to look for, when to deploy it, how to deploy it effectively, how to maximize your profits with it, and how I was able to increase my account size by 9.2% in just that one day. So without further ado, let's get down to trading. Again, keep in mind, I shot this back on October 14th, 2022. Getting to this morning, I didn't allow myself to break my rule, and I was able to actually cash in on a volatility spike that worked out in my favor. Yeah, so this morning after the retail sales were up, I entered into a bull put spread, and as you can see, I was wrong, and I was wrong horribly. But again, I was able to take advantage of it, and I turned a what would have been a red day into a fantastic, one of my better green days that I've had. So let's just go over it real quick. So I entered the 3600 by 3570 bull put spread at 941. I was looking to be in a bullish position and I was waiting for this drawdown to occur. And I thought it was going to rally from here. Obviously, I was definitely wrong. And I got a net credit of 95 cents for that spread. Now, it didn't take me long to realize after it made a new low on the day that I wanted out of this position. And so what I did was I exited my short leg, the short leg only of my spread at 944. So right around here, 944. I exited that short leg for $2.90. So obviously I'm already red on the day. But I held on to my long leg and set my take profit on my long leg for $7. At 10 o'clock, the consumer sentiment was released and Fed President George obviously released her speech. And this allowed or introduced enough volatility into the market that a premium spike did occur. And I believe that premium spike went all the way up to $8.50 or somewhere near there. Obviously, my take profit was set to $7 and I was triggered out at $7 for a total premium capture of $5 on the day after commissions and fees. That's what gave me the 9.2% return on the day. So how can you actually take advantage of this exit strategy? Well, first, let me just explain. These opportunities do not happen very often. Most of the time, if I get stopped out and I think it will continue against my position, my original position, I'll just try to exit my long leg for something close to break even. But looking at the sheer volume of trading today, for instance, looking at the E-mini futures first 5-minute bar, we open at 82,000. I'll be honest with you, I cannot remember the last time we opened that high in the first 5 minutes. So today was gigantic. I figured there was going to be a volatility spike, and I was hoping it was going to be around the 10 o'clock hour. I just wasn't sure which direction the spike was going to go. And this volatility spike was more than enough to wick me out of my take profit. So in the end, if you think implied volatility is going to have a good spike, a really good spike during your trade day, you can actually set up the following orders to try to take advantage of them. 1, set up your buy to close stop market order on your short leg, the same way you always do, at 3 times the credit received. Next, set up a sell to close limit order on your long leg at a price point which will give you at least break even, or much higher if you believe the spike will be drastic. So in the end, you're going to have a stop loss set up on your short leg and a take profit set up on your long leg. With this situation or with this setup, one of a few scenarios is going to happen. 1, a spike occurs. Now, if the spike occurs in your favor, in the favor of your original position, in other words, for instance,
Originally, I had the bull put spread. If the spike had occurred in a bullish direction, your spread will quickly lose premium and you will gain profit quickly. You can perhaps consider a take profit capture on your gains at that point. Now, if the spike occurs against your original position like it did today, you will be stopped out of your short leg, hopefully without much slippage, and hopefully the spike is big enough to trigger your take profit on your long leg. And that's again what happened today. Now, the third scenario is the spike once again goes against your original position. You're stopped out like I was today, but the spike is not big enough to boost the premium on your long leg enough to trigger you out of your take profit. Now, this is actually what happens most of the time. So that's why I caution you to be very realistic on the take profits you set on your long legs. Obviously, in this case, this initial spike only went to about 8.5, but as time proceeded, the premium on that long leg actually has increased all the way up to above $17. But look, I would I've been happy with $17 where it is right now? Absolutely. But the truth is, I'm very happy with the $7 premium that I collected on that.
Well, that's it. I hope this made sense to you. Now, I definitely want to get the word out so I can help as many traders as I can. So please take a second and smash that like button for me. Also, don't forget to subscribe. By doing so, you're really going to help me spread the word about these videos so I can help out other traders as well. Now, if you'd like to learn more about our strategy or you want to try out our trade room risk-free for 1 week, visit us at downtotrade.com. I'll leave a link in the description below. Anyways, that's it for me. Take care, everybody. Happy trading.